RDW closed the session of Friday, the 29th of August, with a loss of 3.15%. The stock has not recovered from the plunge of the 6th of August. Even before that day, I think it was also showing some weakness, but we'll get into all of that later on. The folks at Stock Story are saying that they have three reasons to sell RDW and one stock to buy instead. Let's see what they're saying about RDW. It says here, why do we think Redwire will underperform? Okay. And its per share trending down. Okay. Yeah. RDW's earnings loss deepened over the last 4 years, and its earnings per share dropped 37% annually. They tend to steer their readers away from companies with falling earnings per share, where diminishing earnings could imply changing secular trends and preferences. Okay, free cash flow margin dropping. Okay, let's say they believe that in the end, cash is king, and you can't use accounting profits to pay the bills. Okay, so this is the chart they are presenting for that. Okay, short cash runway exposes shareholders to potential dilution. Okay, yeah, Redwire bond $152 million of cash over the last year, and it's $232.2 million of debt exceeds the $78.5 million cash in its balance sheet. This is a deal breaker for them because indebted loss making companies spell trouble. Okay, unless the company's fundamentals change quickly, it might find itself in a position where it may raise capital for investors to continue operating. For the company, so it may raise capital from investors to continue operating. Okay, so okay, the chair companies are making the lives of their customers easier, but in the case of Redwire, they'll be cheering from the sidelines. Okay, so yeah, so we have it here. The oil prices continue to print. Yeah, after the okay. So as a matter of fact, it actually the weakness began. They got a rejection at $19.5, and no, it couldn't go any further. And then the 10-day moving average, 10-day moving average has served as a primary supply line. On the yeah, okay. Before then, okay, as of the early August, it was a primary demand line, primary supply line, and of late, it's yeah, okay, serving as a primary supply line as well too. Yeah, still doing that up till now, meaning that each time it closes within one standard deviation of that moving average, more weakness sets in. You know, so it continued to print lower prices up till the 11th of August, and even went on to print an intraday low of 8.18 as of the 20th of August. So weakness is still very much on the cards. In terms of the extrapolation, this consolidation that began on the 12th of August is expected to remain in place up till Monday, the 8th of September. And then after that, we will have a leg down and then maybe a bounce. No guarantee that that will be the case. In terms of projections, we have 8.13, 9.91, 13.80, 15.95, 17.24. No guarantee that these will print. Let's see. Down here, we have the 10 and 21 day moving averages are bearish in negative, in bearish modes. Yeah, they're not trending at the moment. Yeah, I think investors are gradually watching to see what's going to happen. If it's going to, if we have to see what's going to happen, they're not just as that piece said over there. Fundamentally, things are not sounding fantastic. It seems. Yeah. Okay, let's have a look at the 4 hour chart and see what's going on. We don't expect to see anything better. Okay, the extrapolation saying extrapolation on the 4 hour chart is saying that strength is going to kick in and remain in place up till Friday, the 5th of September. Who knows? Who knows? That'll be good. But be careful as well. Any strength they get here may lead to a dilution. So here they as well, the 10 period moving averages, the 10 and 21 period moving averages are in bearish modes as well, even though they have positive derivatives. 3 out of the 4 derivatives for the two moving averages are positive, robustly positive. Okay, positive, just put it that way. But it could also mean that it could also mean that maybe um, there is some support, and that may also serve as a launching pad for this extrapolation that's going on here, that is being printed out here. But the extrapolation is also saying that after that we might see a return to weakness. Projections are saying 9.37, 9.89, 10.99. So no recovery yet, nothing fantastic yet, but you never know. If they have a dire need for money, they may come and something might happen. And usually, investors or companies tend to do dilutions when a bounce occurs. We don't exactly know whether one is going to call. We don't exactly know, and we don't exactly also know if they have a body need to raise cash. But the fact that the fact that you saw the piece we read out over there is in place. It gives you, at least it gives you the impression that something like that might happen. So you have to get ready and prepare for the prospects of that happening. Yeah. Okay. So let's see how things go. I'll continue to update you. Thank you very much for watching this video.